Why the US Treasury Bond TLT was sold harder than the S&P 500. London Bridge is falling down. The Queen has passed. The markets have spoken. And Liz Truss has resigned. Truss quit as a UK Prime Minister after just 45 days in the role on Thursday, becoming the shortest serving leader in the country's history. You may ask me why Liz quitting her job has anything to do with the US Treasury Bond TLT. There is a huge connection. What happened to UK last month in September has in fact happened to the US government bond market just last week in October. Well, what exactly happened in UK? Why does Liz Truss quit her job for real? No, I am not talking about her £100,000 of passive income paid by UK taxpayers. Why I believe raising the interest rate may cause core CPI inflation to go up. Most importantly, what really happened on Friday? Why stocks are rallying and bonds got panic sold? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these markets, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl if you want to add more meaning into your life. If you play your cards right, like completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that? Don't you? You want it to be real. You want it to be true. You need to be my client, don't you? What happened to the UK gilt market is that Liz Truss, the Prime Minister, and her Finance Minister announced a very, very large tax cut. But a lot of this is going to the wealthier people, the wealthiest parts of the society. That meant that the UK government was going to have to borrow a great deal of additional money. Just at the time when the Bank of England, which had been buying government bonds through its QE program, it was planning to start selling government bonds. So suddenly, England looked like a third world country. Its interest rates on its government bond doubled in about a 2-week period. They went from 2% on a 10-year government bond yield to 4%. Normally, that would make the currency appreciate, but the English pounds started dropping like a rock. It fell from 115 to the dollar to 103 to the dollar, the lowest in history. So this huge swings in the currency, and more importantly, in the interest rates on the government bonds, was so violent and so unprecedented that the UK pension funds thought they had cleverly hedged their positions with these derivatives, contracts known as liability-driven instruments. But the moves were so large that the people they had these derivative hedging positions with started calling in their margins. And they couldn't put up their margins. So they got sold out of these hedging positions. And it looked like the entire UK pension system, the various pension funds, were on the brink of collapsing. So the Bank of England had to jump in. At the beginning of the week, they intended to start reversing QE. They were going to do QT. But by the end of the week, they were reverse course and announced they were going to do even more QE. They said they are buying £65 billion of additional government bonds over the next month or so. And that has restored calm temporarily. And in fact, it's injected a bit of euphoria in all the markets, because the markets and the investors hope that since the Bank of England reversed course and started loosening monetary policy, they hope the Fed is going to do the same thing. The central bank had to act as a lender of the last resort. No one else would provide money to support the financial system in England. And so the Bank of England said, we will do it. We will create a bunch of money. And they did. But who's going to bail out the central banks when they stuck in between high inflation, which they can hardly print more money, and higher interest rate can't even lower inflation? In fact, when you think about it, when the Fed raised interest rate, mortgage rate going to the moon, which makes landlords raise the rent, so the rent prices will go higher for a lot of people. Doesn't that cause even higher inflation? That is probably why the core inflation number has risen in September, after the Fed has raised the 30-year mortgage rate above 7% already. This makes shelter inflation higher for a lot of people. Does not help inflation at all. Even Michael Burry, in one of his tweets, said QT plus higher rates starting to push M2 down. That's why we are seeing a tick up in money velocity. In 1978, rising velocity trumped falling money supply to drive inflation higher and higher. This will shock people. These three charts show the chaos that ran through markets during the 45 days that Liz Truss was UK Prime Minister. Truss quits as UK Prime Minister after just 45 days in the role Thursday, becoming the shortest serving leader in the country's history. Her premiership plunged British markets into turmoil, with soaring bond yields fueling a potential pension fund crisis, and the pound plummeting to an all-time low against the US dollar. Truss and her finance minister, Kwasi Kwarteng, rattled markets when they unveiled a mini budget on September 23rd. The government pledged to implement the UK's most aggressive tax cuts in nearly 50 years, scraping the top rate of income tax and slashing basic rates by 1%. But Truss' $48 billion tax-cutting plan spooked economists, who warned it would undermine the Bank of England's efforts to tame inflation and force it to hike interest rates even higher. Given elevated inflation pressures in many countries, including the UK, we do not recommend large and untargeted fiscal packages at this juncture, as it is important that fiscal policy does not work at cross purposes to monetary policy. The pound fell to an all-time low of 1.03 on September 26th, as investors signaled their dissatisfaction with the government's fiscal policies. The Prime Minister eventually bowed to market pressure by firing Kwarteng at the end of last week. His replacement, Jeremy Hunt, reversed nearly all of the government's planned tax cuts. The pound climbed 0.32% to trade at $1.12. At last check, as news of Truss's resignation filtered through markets, Truss's economic policies also caused carnage in gilts, or bonds issued by the UK government. Her tax cut proposals sent yields on 2- and 10-year gilts above 4%, making it significantly more expensive for the government to borrow money. And when 30-year gilt yields climbed to 5.06% on September 28th, the Bank of England announced an emergency 2-week bond buying program to try to stabilize debt markets. The BOE intervened to prevent a collapse in pension funds that use liability-driven investment strategies. These funds were forced to sell off their gilts to avoid margin calls, driving up market instability and spurring yields even higher. Since the BOE announced its emergency bond purchases, a 30-year gilt yields have dropped 110 basis points and fell another 2.9 basis points after Truss resigned Thursday. Equities also felt the pain of Trussonomics, although they've been supported by investors' hopes that central banks may start pivoting away from aggressive interest rate hikes, as well as a better than expected third quarter earnings season. London's FTSE 100 index has fallen 4.97% during the past 45 days, which accounts for over 2/3 of its losses year to date. Political and economic chaos in the UK could also weigh on stocks and other assets in the long term. First, her policies went up in flames. Then her brief career as Prime Minister. The great political gamble of Liz Truss has spectacularly backfired, but not before reckoning significant damage to the UK economy. It will take considerable time before the risk premium attached to UK assets fade away, following the financial nervous breakdown which followed the mini budget. Next week is going to be crazy. The storm is coming. Shit is going to hit the fan. So you better watch out. So now I'm going to show you my clients David Vine and Jema's book, Ignite the Passion, Co-Create Your Dreams. Such an amazing book. And my client Teddy Eazzy's Wicked Pussy Perfume. It's an erotic novel. Such an outstanding book. And Teddy Eazzy is such a good boy for being my client. And my book, You Hold the Magical Key to Your Success. Another great book. You're such a good boy for watching it till the end. Thank you for pushing my button. Bye.